Welcome guys, welcome to the pre-market overview. Today is Thursday, September 3rd, so welcome to pre-market overview today. So just to say for those that might be new to this, that might be joining us for the first time, my name's Becky, just to introduce myself. My email address there is becky@tradewithufos.com, so you can email me if you have any questions about what I covered today. There's also the support team. These guys probably better to respond in terms of quicker responses. So they are support@tradewithufos.com. So you can email either one of us if you have any questions about anything. Now, again, for those that are new, just to explain what this is, what's the point, what are we doing? So every day we send out a newsletter, Monday to Friday. We send out a newsletter that goes through 4 of the major markets in the world using the technology that we use here at Tradewith, explaining basically trend or direction that the market is in, how long we think it's going to go in that direction for, when we think price might turn and go in a different direction, volatility, as well as news as well to be aware of. So we go through that in a 2-page newsletter, 2-page document. So we do the pre-market overviews for 15-20 minutes to just explain a bit more around how we came to those conclusions, how we use the technology to do that. So you guys have a little bit more background behind that document. If you want to subscribe to get that document for yourself, that newsletter every day, then email us newsletter@tradewithufos.com and we will gladly put you on that subscription so that you get that every day. Now, for those of us, or those of you that are joining us from outside, or sorry, from inside Tradewith, just to remind you that today being Thursday, you have stocks and investing sessions. Stocks at 9 a.m. Eastern, investing at 1 p.m. Eastern. Of course, Mondays, Wednesdays, and Fridays are our futures and options days, and then sharpening over the weekend. So sharpening is going to be, one of them is a psychology session, and one of them is reinforcing methodology, going through concepts and theory, questions and answers and things like that. In terms of upcoming live courses, the next one we have is the backtesting class. That will be September 19th to the 20th, 2 p.m. Eastern. After that, we have futures, stocks, psychology, and then trading plans. So you can see the dates that we have on the screen there. Now, I do need to put up the disclaimer, so let me just do that. So this will cover up some of those dates there. You can go to the website if you want more information on the courses or subscription. Now, the disclaimer, I'm not going to read it to you. It'll take me a while to read it, but it is important that you guys read it. So you can obviously mute me if you'd like to read it, or you can come back and watch the video later on, or you can go to www.youcantrade.com and get additional disclosure information there. Effectively, in a nutshell, what we're saying is there is a risk involved in trading. You need to take that on for yourself. That's up to you to choose to take on that risk. And that everything we do here in Tradewith, all the videos that we show are for educational content, investment, ideas and demonstrations. They are not meant as trading advice or trading tips or anything like that. There's also a You Can Trade app on the App Store. So if you guys want to download that, then you can keep up with us on your phones as well. Okay, so now that we've done that, let me just close that and we will get through to the, if I can just get up the, there we go, the newsletter. I will show you what we're looking at. Okay, so let me just move price a little bit here so you can look at the numbers whilst I'm talking. Okay, so we've got our trade session chart on the left, we've got our newsletter on the right. Now, as I said, we go through 4 of the major markets in the world. So you see we have the S&P, which is one of the major equity indexes in the world. We have oil and gold, both major commodities, and then we have the euro. Now, the euro, when we look at it, is the euro versus the US dollar, the spot forex currency pair there. That is the highest traded currency pair in the world, and spot forex is the highest traded market in the world. So just in that last market, there's a lot of volume that we're covering, let alone obviously as well 2 major commodities and a major equity index. So even if you don't trade these markets directly, I'm sure a lot of what you trade will be correlated in some way to at least one of these markets. We also have the daily charts here for each of them. So just to explain there, obviously different things happen on different time frames. You know, if you do your analysis on a monthly chart or a 5-minute chart, you're going to see different things. The daily chart does seem to fall within what most people do. So if you're a short-term trader or a long-term investor, the daily chart is very commonly used, commonly looked at, hence why we chose to use that one for the newsletter. So for each of these markets, looking at the daily chart, we're going to understand the climate, meaning what direction are these markets going in? What trend are they in? But more importantly, what are the probabilities associated with that? I'll show you that in a minute. We also want to understand propagating. So propagating tells us where we're at now relative to the normal movement. So what I mean by that is if we see these numbers here on the right-hand side, these numbers tell us how long that market usually goes in that direction for. So if we're in an up market or an upwards trend, the number on the right tells us how long that market normally goes in an upwards trend. If we're in a downwards market or a downwards trend, then the number on the right tells us how long that market normally goes in a downwards movement. So that's what normally happens based on probabilities and statistics. On the left-hand side, it tells us where we're at now relative to that move. So how many days have we already been going in that direction for? So from these two numbers, we can get an idea of the probabilities of a continuous move up or down based on what normally happens. So again, it's using technology to analyze market data for us and give us what's statistically likely to happen. What we also want to know is nearest UFOs. So UFO stands for unfilled orders. And what we mean by that is where we expect there to be big stacks of buy orders in a market that can push it upwards, or big stacks of sell orders in a market that can push it downwards. We use our Alter UFO app to find that on a chart, and it will highlight to us either as a green UFO for buy orders or as a red UFO for sell orders. I'm going to show you both the Alter Climate app, which we use for climate and propagating, and the nearest UFOs on the charts. What we're also going to do per market is we're going to understand volatility. So volatility just means how fast we expect these markets to move, or how far we expect them to move in terms of price movement within given periods of time. Now we get the raw data from the current implied volatility column here. So you'll notice each of these numbers are a percentage, and what they refer to is professional traders' opinion as to the expected movement up or down in 1 year as a percentage of its current value. So it basically shows us what we can expect in terms of up or down movement in a year as a percentage of what it is now. From that, we can then understand what we expect in a day, movement up or down in a day, what we'd expect up or down in a week, and what we'd expect up or down in a month. So I'll go through each of those per market as well. So we'll go through each market one by one, and then we'll come down and have a look at news as well. So let's start with the S&P. We're looking at $SPX.X. That is the sign on, or the symbol on TradeStation there for the index for the S&P. So we can see at the bottom here, we have our Auto Climate app. So the Auto Climate app will show us one of three things. And this is it showing us trend and probabilities. So it can show us a thick blue dot. That's what we see here. That means we have a confirmed upwards climate. We have probabilities there to the upside. We have an upwards trend. Now, it's a thick dot. That's what tells us that there are probabilities. It could be a thick red dot. That would tell us that we have probabilities to the downside, that we have a downwards trend, downwards market environment with probabilities there. Or it could be a thin dot of either color. So the color still tells us the direction, but the fact that it's thin, that's the Auto Climate way of telling us that there are less probabilities. So it might be an uptrend or a downtrend, but there's no probabilities there. It's lack of statistical advantage, which means most of the time we do nothing on those days. We don't want to trade when we don't have probabilities on our side. The whole point of what we do is to use technology and probabilities to make sure we trade with as much statistical advantage as is possible, as well as managing our risk, of course. Just because something is probable doesn't mean it's definite. So, of course, we still need to manage our risk, but we're trying to put as many odds on our side here. So when it comes to the S&P, we have a thick blue dot, confirmed upwards climate, probabilities there to the upside. Now, that's not surprising considering we see that price has just gone up and up and up, keep hitting new all-time highs. When it comes to the stacks of orders, we have our closest green UFO here. That's our buy orders at 3509.73 to 3493.25. Now, there are no sell orders. That's why we've got a blank space here on the newsletter. We've got no price above us, which means there's no market data to analyze. There are no sell orders for us to show you. So for the time being, buy orders beneath us, probabilities there to the upside with the climate. But what we do need to bear in mind, based on propagating, is that normally the S&P would go up for 11 candles in a row. Now, by the way, I'm going to round up that number. So whatever the decimal place is on the number on the right-hand side, I'm rounding out. So normally the S&P goes up for 11 candles, and we're on candle number 25. So we are quite overextended in terms of a continuous move to the upside based on what normally happens. This means we've gone past what's statistically likely to happen. The further we go past what's statistically likely to happen, the less likely it is to happen. So bear that in mind. We have probabilities there with the climate. We have probabilities with our buy UFOs, but we lack probability when it comes to a continuous movement to the upside based on the fact that we've already gone past quite past what is statistically likely to happen. So bear that in mind. So in terms of volatility, in terms of movement that we expect on the S&P, we look at the VIX. And we see from that that we would expect a movement up or down in a year of 26.30%. So what that means is per day or in a day, we would expect a movement up or down of 0.59 points. In a week, up or down of 1.31 points. And in a month, up or down, a movement would be expected of 2.72 points. So again, that's how far we would expect the S&P to move within those given periods of time. We then got oil. That's the next market on the list here. So at CL. So let's go find that. That's the continuous futures contract there for oil. Just going to squidge it a bit. There we go. So we can see on the bottom here, our auto climate app is showing us a thick red dot. So that tells us, because the color is red, that we have a downwards climate, downwards environment, downwards trend, and it's thick. So that tells us we have probabilities to the downside. So probabilities to the downside there in terms of climate with oil. In terms of closest stacks of orders, we have our closest buy orders here, 26.31 to 25.80. And we can see it's just nestled on top of another buy UFO there. They're just sort of hugging each other there. Then we have our closest stack of sell orders, which is what we've just come off of here. That's 42.61 to 43.78. Again, that's the closest stack of sell orders that we would expect to push price down if price were to come back there. So when it comes to oil, normally price would go down for 7 candles, so 7 days. 7 candles on a daily chart, 7 days. We're on candle number 3. So we have probabilities there for a continuous movement to the downside. So it looks like when it comes to oil, we have signals showing us there that we have more probabilities to the downside here. We have a confirmed downwards climate. We have probabilities that it keeps going down at least for another few days. And we have sell orders close by. All of those tell us, based on the technology and probabilities, that we have statistical advantage there to the downside. Now, again, manage our risk just in case we're wrong. But at the moment, probabilities to the downside there with oil. So in terms of volatility with oil, what we expect in terms of movement up or down, we use OVX.X, and we see that we expect a movement up or down in a year of 35.49%. So that means in a day, we would expect 0.91 point move up or down. In a week, a movement of 2.01 points. And in a month, a movement of 4.19 points up or down. Okay, that's oil. Let's move on to the next market. We're going to look at gold at GC. Okay, let's just move that a little bit. There we go. So we can see once again a thick red dot. That tells us we're in a confirmed downwards climate, probabilities to the downside. Closest stack of buy orders is this one here, 1836.7 to 1825.9. And we have our closest stack of sell orders just here, 1973.7 to 2001.9 or 2001.9, however, sorry, 0.2, however you want to say that, that sell UFO there. Now, again, when it comes to gold, looks like we have probabilities there to the downside. So we can see that normally gold would go down for 3 candles in a row, and we're on candle number 1. So we have probabilities for a continuous move to the downside, at least for a couple more days. We have a confirmed downwards climate when it comes to the climate, and we have sell orders close by. So once again, oil and gold both showing us their probabilities to the downside. All of the technology is showing us sort of selling signals there. Again, manage our risks just in case we're wrong. When it comes to volatility on gold, we look at GVZ.X or GVZ.X, if you want to say it properly. The expected movement up or down in a year is 23.57%, which means in a day, a movement up or down of 28.7 points. In a week, up or down of 63.3 points. And in a month, up or down of 131.7 points. Okay, so that's gold. Last but not least, let's have a look at the euro. So euro, US dollar, spot forex currency pair there. Just move that so we see what we need to see. I'm going to squidge that a bit. Okay. So we see here, you might not be able to see it very well, and there's a point to that. It is a thin red dot. So it's red, that still tells us that we have a downwards trend or a downwards environment, but it's thin. That means that there are less probabilities. We don't have statistical advantage there to the downside. So when it comes to the euro, because it's an unconfirmed climate, you'll see here on the newsletter, we put a little cross next to the arrow. That's the newsletter way of telling you that it's an unconfirmed climate. So in terms of closest stacks of orders, we have buy orders here, 1.1597 to 1.1507. I've just rounded that where it needs to be for the pip. Closest stack of sell orders, again, a new one there. We've just come off of it, 1.1901 to 1.2012. Again, just rounded that where it needs to be. Now, we can see that we have a whole bunch of buy orders beneath us there. So lots and lots of buying pressure underneath us, although we have just, obviously very recently, created new selling pressure. So in terms of what we expect in the euro, normally it would go down for 4 days. And we're on candle number 1, so day number 1. So probabilities of a continuous move to the downside. However, we have a lack of probabilities when it comes to the climate, the fact that it's unconfirmed, what we see here. And we have loads and loads of buy orders beneath us. So kind of two different things playing off against each other there. We've got an unconfirmed climate, but it could go down for another few days based on probabilities. We do have sell orders we've just come off of, which again would show us that we have more probabilities to the downside, but we do have a lot of buying pressure beneath us as well. So we've got those two forces playing off against each other. So most of the time we're going to choose to step back, let that fight happen, not be involved in it, and then jump on the winning side, whatever happens from that. So when it comes to the euro, we look at EVZ.X, and we see that we would expect a movement up or down in the euro in a year of 8.05%, which means 60 pips movement up or down in a day, 132 pips in a week up or down, or 274 pips in a month up or down. So again, the volatility numbers give us an idea of how fast price is likely to move, how far it's likely to move within given periods of time. We then have UFOs that will give us an idea of where price could turn. And we have climate and propagating to give us an idea of in which direction we're likely to see that movement. So again, it's all using statistics, technology, probability to have an objective and opinion as possible when it comes to the markets, using technology to do a lot of the work for us and analyze a lot of the market data for us. And again, only trade with the probabilities and statistics. So this is everything in terms of direct forces. So what I mean by that is that the most direct forces we have to push price up or down are buy orders and sell orders. That's it. That's all that moves price, is buying and selling. Now, of course, there can be many reasons as to why there are buy and sell orders. So we do need to understand indirect forces, things like news and reports, other things as well, indicators and things like that. For us on the newsletter, we are looking at the reporting, the news reporting that we expect to add orders or maybe take away orders and therefore potentially increase volatility. So we look at fxstreet.com/economic-calendar, and we filter there by high impact news. Lost my mouse for a second there. High impact news and US markets. So of course, if you trade outside of that and you want to look at things outside of the US or lower impact news, you can go to that website and change the filters there and see what you want to see. Now, just to show you, the reason that we keep Tuesdays and Wednesdays on there, even though they've already happened, is just to show you that when the information comes out, when the report actually comes out, they will populate information in the actual column here. So for now, obviously what's coming out today and tomorrow is blank because it's not come out yet. But in terms of yesterday and the day before, then we see data there. So it's just to show you what will happen as that information comes out. Now, on the left-hand side, we see the time as to when these reports are likely to come out. So for today, being Thursday, September 3rd, we have ISM Services PMI. So that's coming out at 2:00 p.m. Eastern time. So again, it's not to say that we jump on the back of what happens in the news or that we follow the news with our trading. It can be erratic and unexpected, but we just expect there to be volatility or potentially a change in order flow with these high news or high impact news items. So just be aware of them. And again, use it in your trade plan as makes the most sense to you. Okay. So that's everything for today. So just to round off, just a reminder for those that are joining us from within Tradictive, you can join us in our stocks and investing sessions today, 9 a.m. Eastern for stocks and 1 p.m. Eastern for investing. So we'll see you there. Otherwise, tonight, 4:15 p.m. Eastern, my colleague Wayne will be looking at what did happen in the markets, what went as expected, what didn't go as expected, what did the news do, what changed, what can we learn, how can we move forward in our trading. So join him there. In terms of people that are joining us from outside of Tradictive that might be interested but not too sure, you can learn more about us at tradictive.com/you-can-trade. Again, in those sessions, you're going to have futures, options, investing, stocks, psychology, sharpening, methodology, and support as well. So you can join us there. Of course, there are loads of places you can learn to trade, and it can be a bit overwhelming as to which one's going to be right for you or make the most sense to the way that you think. So you do have a free 14-day access. You can try us out for a couple of weeks first, see if it's for you, see if it makes sense. If it doesn't, no problem, just cancel the subscription. If it does, then at least you've had a couple of weeks to really know that it makes sense for you before you continue. So in terms of upcoming live courses, for those that might want to learn specific concepts or asset classes, the next one we have upcoming is the backtesting class, where we teach you how to take a methodology and look to the past to test it, see that it works first before you place any trades or before you risk any real money or real time. So you can learn more about that at tradictive.com/backtesting live. And then just to say, you can register for any course at the moment. And thanks to You Can Trade, get an additional course for free. So have a look at what we do, have a look at what classes you might think make the most sense to you, and then put them together in such a way where you can make the most out of that deal. If you have any questions on anything, not just courses or subscriptions, but technology that we use, or I don't know, TradeStation, any trading questions, whatever, we are happy to help. You can email us at support@tradictive.com. Otherwise, we'll see you in the sessions later on, or I will see you tomorrow morning for the overview in the morning. Hope you have a good day, guys. Hope the markets treat you well, and see you tomorrow. Take care. Bye-bye.